Hi, everybody. This is Lewis Johnson. I'm the Chief Investment Officer and a partner here at Capital Wealth Advisors. And I am panicked about the Fed.
Friend.
Hello, how are you, sir?
Would you like to panic with me?
I would love to panic with you,
Usually,
sir.
By the way, that'd be a killer move by a freak at high school.
Yeah, no kidding, right?
Hey, kid. Hey, friend. Would you like to come panic with me in the back of my station wagon?
As long as it's not a white panel van.
That's
okay.
quite a audience thinner, that intro by Howard Linson. What's up, my man?
Not much.
Introduce yourself.
Hello, my name is Knut Jensen, and I'm panicked about Howard Linson in general.
No, I know, but who are you?
Who am I?
You sound Dutch.
I'm Norwegian.
Oh, yeah.
Born and raised. English is my second language. I may have an accent, but you know what an accent means? It means that you know more than one language.
And that is true. Your English is spectacular. Your skin is pearly white. Your eyes are fucked. But that is for another story one day. Do you have an anecdote about me? Is there something charming that I've done recently that's offended you or upset you?
Oh, yeah, no, it's nothing really serious. I just get bent out of shape once in a while.
You give me that look.
Stress. You know, we had
Ellen gives me that look, and I just pout.
Couple of weeks of stress. I kind of had a couple of episodes that had to go out on time, and it was there were some challenges. But now we're doing great.
Wow, what a whiner. So, how's the fam? Good?
Yeah.
All right. Well, I have a very special friend, my fishing pal, my commodity expert, my macro whiz, a man of many hats. He's been hiding in the dark, scared to talk, because it's been tech, growth, market cap for 150 years, Knut.
Yes.
Uh-huh. And here we are. It's 2022, and things have changed. My guest, Lewis Johnson, was introduced to me by my friend Lowell Kamen, a Toronto kid that I grew up eating mac and cheese with in the third grade. And Lowell called me out of the blue 40 years after talking to me last over that mac and cheese fight. I think I took more than half of the mac and cheese in kindergarten.
No. That's bad.
So I sold some futures against his portion. And I said, you got to meet this Lewis. You know, he's different than you. He has different opinions, but you guys are going to hit it off. And we did. We've gone fishing, and I go down to Naples once a year to fish with Lewis, and he takes care of me. And like most people, because he said this to me, a lot of people say, hey, you're surprisingly athletic. I remember the first time I fished with Lewis, he goes, you surprisingly know how to fish. So on a long string of me that surprises people. Anyway, so Lewis is he's got an accent like you, Knut, and he runs about a couple $1 billion wealth management shop called Capital Wealth Advisors, and we'll go back November 2020 when people realized maybe they might not die from COVID and the Fed was printing money, and we were in Nirvana, and I decided to say, you know what, this smells. I was getting nervous. I was selling some stocks and talking about how quickly we had forgotten the panic. And Lewis came on, and I posed a question to him about value and growth and about commodities, because Lewis really understands the cycles, having grown up in research and working as an analyst at T. Rowe Price. So here's what he had to say in November 2020.
There will be a political release that will drive it kind of the other way to try to address that. And so part of that happened, and when that happened in the 70s, it killed the Nifty 50. Mm-hmm. And when that happened after it wasn't this kind of populist thing was driving it, but kind of when tech, flamed out, and when commodities had such a poor growth record, and it's not just commodities, it's the whole value framework of the market, right? I saw something today that said this has been the worst stretch of value stocks versus growth stocks in the last 200 years. Wow. So that's a very anomalous event, and now it could overshoot some more. So this is not a prediction in the short run or whatever, Howard. But but it's been my experience as a cyclical investor that the market is brutal in this one way, is it will reward you for being an expert in something narrow, and then all of a sudden it will make your knowledge irrelevant because something 10,000 miles away in the other end of the world will start working. You don't know anything about it, right?
Yeah.
And so that's the humbling nature of the market. And so I really think that at some point you look at the market caps, you look at what's taken place in tech, which has just been literally like one of the most powerful cycles in the world. And it just doesn't make sense that on this set of politics and with people this angry, with growth this low, that's an equilibrium situation. I just don't see that can last.
So Knut, that was November 2020,
Yeah.
and no one has a narrower expertise than me. So that got my spider tinglies going. I think you remember in 2021, I was kind of on the way out of things and complaining about how silly things were. I don't have an expertise in what Lewis has an expertise in, which is why I enjoy talking to people at different points when I have want to expand my knowledge. So it's been very hard for me to, I think in this 8 to 80 brands, tech, software way, and here we are in 2022, and that is the most out of favor thought right now as we speak. And so I wanted to bring back the man to talk about when did that trigger really happen, how long this could go on for, where the Fed is at, what are we thinking about inflation, how do you talk to clients, how do you reposition when you're someone like me who's super narrow. Now, I talked to Lewis, and he guides me a little bit, and we've talked about agriculture stocks, blah, blah, blah. So let's just get him on and ramble.
Sounds good.
Lewis,
Hello.
how are you?
Hey, I'm fine. It's good to hear your voice again, Howard.
Thanks, man. So it's been a while. I mean, we talked, but it's been a while. November 2020. I'm sure you don't remember how correct you were because I'm sure you were early, like everybody is early. I'm late. I feel late to this, but I'm probably not late. Where are we, and when was the true trigger point? Because November 2020, you said a lot of great things, and people can go back to listen. But, you have a wide framework of things. The things that you said about market cap rang true, and they're still possibly ringing true. The thing you said about having a narrow focus, that's why I was so excited to talk to you, because I think you can appreciate I'm trying to fade myself last year, and it worked a little bit, but no matter how much I expand my knowledge, I'm getting stuck like a pig. So how do you talk to people like me right now?
Well, it's interesting, Howard. I did have a recent conversation with some old friends from T-Row talking about what was going on in growth, and they kind of had reached out and they said, "Hey, is this for real?" And I said, "Yeah, I think it's real." And I guess the reason, I would think it's real, Howard. It really, these cycles have a logic of their own, and they, they're always different. Maybe they rhyme, but they find a way. And I think the thing that I was talking about back in 2020 was just that things were absolutely out of control in terms of how one-sided the world had been. And I was just looking for something to end that. I didn't know exactly what that was going to be, but I guess when you've been doing this long enough, you kind of know the signs or whatever. But if I had to kind of put my finger on it, Howard, I would just say that, it was always the bleeding edge. It was the super high growth tech and kind of small and mid cap that ended up being very speculative. The tide started going out, and you see it in the most speculative names first.
COVID probably gave that last push to it, which suckered the most people in, right? Like, I remember going, what? We're not dead. You touch yourself like falling off a bike or getting in a car accident. And by April, you're like, what? I'm on Zoom and I'm writing checks. And so that led to that last, okay, tech will win forever probably, right? That's the last, like in hindsight now, let's go back. And the next 6 months were Nirvana. I had you on in November, and you could start to see like it was getting silly. At least I was. Yeah. So I was looking for thoughts. So when did the turn really happen? Was it COVID? Was it oil going negative? Or is it just a series of events that flipped it?
Well, I think,
Where
Howard,
did you see it first? Where did you start getting confidence that commodities and value would really come back in favor? When did you get with your team and saying, let's flip some models and let's switch some weightings?
Well, I guess a lot of that's micro-driven, Howard, and I think the first, say, non-gold commodity we started getting excited about was natural gas. It had fallen from $12 in 2006 to $2 in 2018, and so I was like, wow, down 90%. That's bad. The bigger companies were going bankrupt, and so of course I thought this is interesting. Took a poke at it, and then of course I was 2 years early. which is the way these things work. But then it broadened out, Howard. But I really think if I were going to categorize it in a big picture way, the biggest word I've been using to describe this is kind of a deglobalization cycle. And what I mean by that is, let me take a step back. I mean, I'm a big believer, Howard, in simplicity, and I would be willing to bet you that the person who's going to be the king of the next cycle is going to be able to categorize it very simply, very early. Yep. And this is why I say that. So if you think back about, say, the 1990s, tech bubble, 2 words. You think back about the next decade, that was industrialization of China. Okay, that's 3 words. And I would submit that the cycle, which is, in my opinion, ended, was probably, the iPhone or the mobile cycle. They came up with the idea, God bless them, in 2007 that people wanted to run their lives from something they could put in their back pocket. And it was freaking genius. Right. And that took over the world, and God bless them. And the market rewarded those companies in that ecosystem because the society progresses through solutions, and those people were providing solutions. Of course, people didn't know that was a demand that they had, but the market in its wisdom found it, capitalized it, and frankly went a little crazy with it, which is what happens in all these cycles. And so I would submit, Howard, that the cycle that is now underway is really a deglobalization cycle. And what I mean by that is that the whole post-World War II era that we've lived in for the last 75 years, that's dead and shattered. The first, stab of the dagger was 2015 with the failure of the Doha round, which was, the World Trade Organization prior, the GATT, General Agreement on Tariffs and Trade. There had always been, Howard, a global a global set of trade liberalization that was underway ever since the Johnson administration. So in 2015, they just walked away from the Doha round that had been paused back in 2008. And I thought that was interesting because that was there's a saying in kind of the international trade legislation where you may recall I was active in as a textile lobbyist, that basically free trade was like a bicycle. If it wasn't moving forward, you're falling over. Right. And so that was quickly followed by Brexit. It was quickly followed by the Trump election. It was quickly followed by the China tariffs, and then COVID, was clearly like the mother of all deglobalization events. And then I guess the 5th or 6th one in the chain was the Russians invading Ukraine. And now it's obvious for everybody to see. But I would be willing to bet you that the name of this cycle, or at least my current view, is the name of the cycle is a deglobalization cycle, and that has many manifestations. But that's the lens through which we're seeing the world.
I think that's wonderful, Knut.
I agree.
Yeah. So thank you for framing that. So in a deglobalization world, because I've been trying to, because you're helping me think through how I got to talk to founders. I've been saying, if you look at a game of Risk, because that's unfortunately all I think about, because I played it so much as a kid and won a lot, and I'm not that smart, but it really is a strategy game, and it's amazing. When you play with beginners, they would start in Europe and lose. Unless they were incredibly lucky with dice. And, so everybody wants to think like a globalist, but we are really, China went dark. Yeah. Russia's dark. Meaning, if you're a startup, take that off the map. And by the way, if you're a software startup, take Europe off the map. After what Google and Apple have done to Europe, right, and killed competition amongst these countries, they're going to learn. They don't want more Googles and Apples over there. They need to help their own countries. So those are the ways that I think about tech, right? And I remember watching Robinhood fail in China and Australia and UK. Now, there's strategies to go global if you're a software company. It don't have to be through roll-ups and creative ways, but I think this globalization, even in software, is going to suffer. So in a deglobalization world, you're right. Just like COVID was the trigger sending oil negative, it was probably the trigger in deglobalization. So what happens next? Do just market caps come down no matter what for pretty much everything?
Well, I mean, look, it's hard to say what's going to happen, Howard, but I don't know. I just think about the tech cycle last time that flamed out, and so the NASDAQ fell 85%, and maybe half of that money just got destroyed, and then the other half sought out a home in the relatively tiny market caps of everything else that was left, particularly kind of basic materials, commodities, and frankly, a little bit of many trillions of dollars goes a long way in an undercapitalized part of the stock market. So I would be willing to bet you that something like that will happen. It's not just supply and demand, say, driving the price of the commodities up. Howard, I was sharing with my friends that it's with you earlier, from T. Rowe, and I was just walking them through the scenario of we owned a large fertilizer company back in the day, and there was a large shareholder who worked for a company that had several $100 billion behind him, and if he was going to show up and he wanted a piece of it, he had to put $250 million to work, and so he had to kick a hole big enough in the company to accommodate his $250 million. And he got there, but the share price went up a lot, right? Because the money needed the market cap to go up just for him to have a seat.
So how does someone position themselves? How does like a client or someone that comes to you that's already wealthy, there's two people, someone that comes to you that's wealthy or someone that wants to start investing today, how should they look at the world differently from an asset allocation standpoint in a deglobalization world? Is that something you can kind of take a shot at?
Yeah, no, for sure. I mean, if our view is correct, Howard, that this is a completely new world, like the old world is dead.
Yep.
I mean, it doesn't exist anymore, which is personally sad. But, we have to live in the real world as fiduciaries. And so, so I think the old leaders are all going to lose capitalization because they're not the new leaders.
Right.
And they'll donate that. And it's very simple what makes that happen, right, Howard, is again, the society does progress through solutions. The market does reward people that create value for society and the things that they want. So the market's going to create a whole new crop of winners. And so while some of this may sound a little downbeat relative to the nature of the cycle that got us to this point, I do believe there always is a bull market somewhere.
Right.
It's just in a different place, which is the humbling nature of the market. So anyway, in terms of how we're addressing the market, Howard, we've kind of had a defensive stance ever since about mid 2021, because you recall we were kind of on the lookout, just like you were, to we were skeptical, but we didn't, know where in the clue game, Mr. Body was going to get murdered.
Right.
So we were looking for it. And frankly, the first thing I saw was the real estate, the kind of bursting of the real estate property bubble in China, which I think at the peak had a $60 trillion value.
Mm-hmm. And that happened last year, right? With the...
Well, yeah. If you go back, I mean, the actual top date was in like August of 2020, and that's when Xi Jinping, the leader of China, came out with a policy they called the 3 red lines, which basically was a quantitative limit on the credit from any source that could go into the Chinese property market. And the one thing that was really frankly a freaking horrible idea, is one of the stupidest policy decisions I've seen in a long time, and I've seen some doozies because I mean, look, real estate is a levered market. People don't own real estate for cash. People own real estate through the mechanism borrowing, and so to quantitatively choke off the late stage growth of like one of the biggest property bubbles, I think, in retrospect, in the history of the world, is just a really bad idea. And so we started having a lot of internal communications with our advisors and with clients, just saying, look, you need to watch out for this. And then I think we recorded our own little market happy hour about that. It was August, September of 2021, something like that. And we were like, look, this is a problem. And so anyway, if you've been watching the the bonds or the prices of that entire complex, it's really been a disaster. And so in my experience, Howard, the failure of a large asset class, and remember, if the estimates I've seen are correct, at $60 trillion, that's larger than the U.S. equity market. Okay, so when you
Wow.
bludgeon one of the world's largest asset classes, you're going to create a problem for the world. So we began de-risking kind of on that basis, and for a while I felt really stupid because we underperformed in a lot of our more conservative strategies fairly meaningfully in the late part of 2021. In retrospect, I think that was because the market was a little crazy, and at least in parts of it were crazy. I think we can see that with more clarity now.
Yeah.
But that kind of got us started on this kind of de-risking bend, and we've kind of been doing something similar along the way. I mean, we have definitely benefited from essentially the dramatic short squeeze on a lot of these commodities that the Russian invasion of Ukraine demonstrated how short we were. But frankly, again, Howard, remember, we could see the outlines of that in 2018, and of course we were a good 2 years too early on that. But that I think is what we're trying to get positioned for, Howard, in terms of the next new bull market. Where is going to be that bull market? We think it's that the world needs cheaper commodities than kind of it has right now, but we need the supply, Howard. This kind of, we
Right.
began this thing about, if I'm panicked about the Fed, the Fed can't print corn, they can't print wheat, they
Can't print nails. It can't print parts for like a wheelchair that's 99% built.
They can't print natural gas that the Europeans need, right? So what we need is essentially like a Marshall Plan of our political leaders sitting down and saying, love of God, like we've got a multi-trillion-dollar problem here because the Europeans cozied up their energy supplier turned murderous. And so they're not happy with that. They want to have a different set of supply. But, power and electricity, energy goes into everything, Howard. Everything that's made in the world has a huge energy component. And, of course, the world in its conceit, of course, had gotten to the point where, we were all going to drive, flying cars, and there's never going to be any carbon, and we're all going to feel really good about it. And in retrospect, that's just not how things are playing out. And so that was, I think a sign of the fact that, people had they had the wrong view of the way the world would be like going forward, which is the way these cycles go. So that's kind of what we're doing. Our big picture is we're kind of avoiding the last cycle's winners. We continue to be kind of defensive at this point, but we're really trying to identify those companies who are going to provide these solutions. And I do think it is going to be a multi-year cycle. Like if you think about just the scope, for instance, of replacing
supply
Russian
chain
natural gas in Europe, that's, oh my God. I mean, that's incredible. I mean, that's going to take the full focus of many companies and countries in the world, I don't know, 8 years, a decade. I mean, none of that infrastructure exists. Someone's going to have to build it, and then we're going to have the natural gas, going to have to liquefy it, send it over there, and send it all through. So these are really big problems, but again, we try to identify problems, and we think that the market will create profitable solutions for that. So that's what we're about in terms of our research effort.
All right, so I got three things. Natural gas, you were early, probably still a huge problem. First of all, thank you, because you did it without going political. You just basically summed it up, because I know if Knut and I agree on something, then we're both nodding. Europe's energy supplier turned murderous is the headline. You can fucking blame it on Biden or Trump or whoever we want to blame it on. That's a fact. The fucking guy is a murderer. And Europe, the idiots, have no planning, just like the average retail investor or the average speculator. And it's more dangerous at their level than my level. I just can blow up my account. They're blowing up the world. They were relying on a murderous supplier of their drug. And that now is a problem. So my mistake, and again, I can recover from this mistake because my defense was cash. Everybody knows that's listening to me. I was like, oh, I'll just wrap myself in cash. The mistake I made was whatever wasn't in cash was in the same stuff that's been working. So it still hurts because my defense was not really defense. meaning whatever I was left on was just so wrong. So I was making up for my defense with a small bit of last cycle's offense.
Yeah.
So that's why I'm selfishly talking to you as well, but I appreciate this. So my defense was the wrong defense, meaning if you have a bad defense, you can still lose 9-0. So now I'm woker, and by woke meaning I don't like getting beat over the head, and cash is not a good enough defense in a world. You still have to have some offense. And so this is more about how do you play a little bit of offense wrapped around your defense. So you're saying, I get it, there's energy. Is there a hope? So you talk about deglobalization. In a deglobalization world, this is why I love my job in seed stage investing. I can still invest in tech. I just have to remind the founders that in a deglobalized world, market caps are going to come down. You're going to have to be much more sophisticated about how you strategize for exits. So it's easy for me to repackage my core business. But in the world where I want to invest savings and invest offensively, I have to come up with a new plan. I noticed, yes, natural gas and commodities and things that fix the supply chain, but tech will still work. It just have to be tech under this deglobalization mindset. And that could just be valuations. It could just be patience. One thing I notice is like certain drug companies breaking out, like Merck. So there are huge companies that are globally recognized brands that still might work. How are you thinking about it? Are you looking for price strength, or are you just are going to the old cycle playbook?
Well, the first lens that we're using, Howard, is valuation, which doesn't sound that thrilling, but I think, if you recall, one of the comments I made in the last time we chatted was that valuations matter, and that would be a lesson that people would learn in the next bear market. And so I would submit that people are learning that. And so our first lens is that risk management. So we don't want to overpay for the things that we do like. And so, thankfully we are finding a lot of, sectors that are undervalued. But, if just think about thematically, Howard, what are the aspects of deglobalization, right? So the first one is the need for capital to reconstruct supply chains, because the old world, right, had one big plant in China that made everything and sent it all over the world. Like, I don't think that's going to work anymore. So what that means is someone's going to have to build a plant in Mexico, build a plant in the States. They're going to have to, where people are located relative to their end-use market, that's going to be, a big deal. I mean, frankly, defense spending is up a lot. If you take a look at defense stocks, they have been wonderful performers. They're great businesses in many instances. I mean, it kind of fires me up as a taxpayer, but as a capitalist, a lot of these defense companies, they have almost guaranteed profit margins and so forth. And now they're getting a lot of spending and volume jammed through them because people have woken up to the fact that the world is a little riskier than they'd like, and spending a little bit more on defense makes people feel better. So I would argue that defense spending is in a bull market. So thankfully, there are publicly traded companies that we can invest in. That's, to me, an aspect of deglobalization. It was one of the things, actually, that we were discussing as a research team. This was before, Mr. Putin rolled his tanks into Ukraine, was that, war is the ultimate form of deglobalization. So, so again, I mean, I'm just trying to make money for our clients and to get positioned to identify things we're worried about and ideally to profit from, new trends. And so anyway, defense, I think, is one of those things. And another thing has to do with commodities, right? I mean, if you take a look, we talked about natural gas. The U.S. has had pretty strong natural gas supply growth, but, clearly it's not strong enough in terms of meeting a greater need. If you take a look at some of the LNG prices that prevail, and it's not just in Europe, it's in Asia as well. These are incredibly high prices. So that's the market is desperately calling out for new supply. My worry in this period, which is kind of what I led off with, Howard, is that the Fed, in my opinion, is making a very meaningful error in that we're not seeing quote unquote inflation in the traditional way. The dollar's a new 20-year high, okay?
Right. Like luckily didn't listen to the Bitcoin people and just stayed in cash. So my dollar at least, but I'm getting scared about that. Like there's only so many ways I want to go fly around the world to spend my strong dollars. Like I want to invest. So so thank you. So what do we do? Or what do we think about doing?
Well, so yeah, I mean, look, I guess I have a longer term view and I have a shorter term view, Howard. The longer term view is kind of gets back, and I wouldn't change anything we discussed about, back in December 2020. We need to better capitalize the global commodity complex because prices are high, and this is really hurting people's standard of living. And just like, frankly, the market took a good idea and overdid it in tech by throwing money at a lot of things in retrospect that were crazy, we have a very well-defined need for lower-priced commodities or a higher abundance of commodities. And that'll start off rational and fundamental, and it will end up crazy. Because that's the nature of the cycle. But there's still a lot more we have to do. Now, in the long run, right? In the short run, what I'm worried about is this kind of miscategorization, I think, that our financial authorities, is they're looking at the world and saying, oh my God, we're in this inflationary tsunami. It's a globalization shock. We had the most globalized world ever, and it just deglobalized at the fastest rate since 1914 and World War I. So of course it's a crazy supply shock, and the cost of living is real for real people, and that's ruinous, and it's got to get fixed.
Yep.
But that is not crushing demand by raising the price of money is not the fix for that. So my concern is that in the short run we've got to keep our wits about us as we navigate this period where the dollar is already wicked strong, where emerging markets are in crisis. The cost of living is up, and these people are content to, batter the world with higher rates. I mean, I just don't think that's going to work out as well as they think. I mean,
no.
You were kind enough, Howard, to send me that email about, it was a gentleman that was writing about the quick collapse in the Chinese currency that took place in late April. I still remember the Asian crisis. I've been doing this long enough to remember that. And, China's much, much bigger. I don't know how far down that rabbit hole we're gonna go, but the Asian crisis was about the collapse of the Thai property market, and then that became kind of a big thing. So I want to navigate this tumultuous period as we go from the old world to the new world. But you do got to kind of live every frame. You can't jump to the end of the movie. So we do kind of retain a pretty defensive posture.
Well, you've sold me. I mean, I'm a huge fan. So I'm lucky I get to talk to you. I don't think you could frame, like Canute, I mean, I don't think we could set people up for how to think about the next few years defensively than what Lewis has already shared. Lewis, how do people, tell us a little quickly about the business, how someone becomes a client, and how people can at least, if they're cheap, want to tap you for free and learn a little bit more about the firm.
Yeah, so Howard, of course, it's they can find us on the internet, which is a series of tubes.
See, I thought you said the internet was dead.
It's a series of tubes. But it's
and fish.
Yeah, exactly. But it's capitalwealthadvisors.com. Of course, like I said, I'm the chief investment officer partner here. It's a full service wealth advisory business. So we do help clients with, their money management. But we also do financial planning, estate planning, family office services, and so forth. So, if people are looking for a little help to navigate an ever confusing world, that's what we're in the business for.
Tell me about Florida. Now, all my friends like you in Florida. Tell me what you love about Florida. And you're on the Gold Coast. What do you call your coast?
Oh, wow.
The Margaritaville Coast?
Everything has a nickname. I forget where we are, but I'm on the Gulf Coast down here in Naples.
I love the Gulf Coast. It's just so peaceful.
It's beautiful down here. I tell you, I've been here 2013. When I moved down here to help start up the wealth management business here, because it was a startup, as you recall. All my Wall Street friends were like, "Love of God, man, where the hell are you going? Like all the action's up here on Wall Street and stuff." And so it's interesting. So clearly, there's been a lot of growth. People are discovering it. Part of that's a tax arb. Part of that's a quality of life. COVID and the restrictions around that rattled some people. So Florida is, I think, really well run, honestly, in terms of a franchise of creating a place that people want to live. And so there's a tremendous amount of inbound growth. This has been great for us. Of course, we have offices all over the South, actually. So our headquarters is here in Naples. But, it's just a wonderful place. And as you know, Howard, I love the fishing. I live 30 minutes from the Everglades.
Yep.
So I can get down there literally in half an hour. It's just God's country down there. Beautiful mangroves, all the sea life. I can't, frankly, all this market volatility is getting in the way of the fishing. I wish it would calm down.
I mean, I agree with you. I hate spending screen time because it makes me feel dumb. So this has been a treat, but screen time fucks with my brain. It takes away from my thinking. So I agree with you. The volatility is that's when I get paid, or at least to pay attention. So I'm waiting for it to dampen, but it's pesky. It's just high enough to keep me on my desk. And I guess it's just part of the life that I've chosen. Is that the way you feel about it too? Like you have to be around when volatility's high?
Yeah, sadly. Because we definitely aspire to be long-term investors, as you know, Howard, I'm early like in everything.
Yeah.
But, but look, volatility, what volatility in the market says is that things are changing. And that's our view, right? That things are changing. Old cycle's dead, new cycle has begun. It won't be in a straight line. And so the world has got to sort itself out now. And it has many manifestations of that we're still kind of going through right now. So, I get where the volatility is coming from, but it won't stay up for forever. But but the market's got to rearrange itself and to create the kind of outcomes that society wants. And so we're going to get there. I just think that it pays sense to have. It makes sense to have a risk management first framework as we're going from one phase to another.
Yep. Well, I'm glad you're doing well. Sounds like the firm's doing well. I mean, you never know, but the firm seems like, your message is, you're starting to be a little more playful and social. I think hopefully I'm part of the reason you're there. Like you're starting to see that there's a lot of smart people and it's fun to hang out once in a while.
Yeah, no doubt. Well, in fact, I've definitely found a number of people on Twitter, for instance, who, were very well-placed, people that are on important themes and have a level of expertise that I certainly don't have. And it's interesting after a time you figure out, to some sense, who knows what they're talking about. And so I'm definitely finding, bits and pieces of really useful things out there. It's a very much it's a different world from, the world I kind of grew up in a million years again at T. Rowe. But, ultimately the fundamentals always matter. Supply and demand matter. Valuation matters. The market will price in what has to happen. Yep. Smart people will figure that out. Everybody else will get run over by it. Yeah. And, and the new cycle should bloom for a while until it gets crazy and stupid, and then it will end and we'll start all over again.
Yeah, and I think that's great. People like me I'm in the mode right now where I'm just trying not to get run over. I'm looking to avoid black swans, and cash has definitely kept the black swan away for the moment. But like you said, it's really weird to see the U.S. dollar so strong. And I know the argument, best house in a shitty neighborhood, but I don't want to live by that argument.
Well, I don't know, Howard. I've got a more nuanced view on this. Basically, is that look, quick story, right?
Yeah.
So I love history. History I think gives you a leg up. The study of history gives you a leg up. So I remember reading Herbert Hoover's Memoirs of the Great Depression in 2 volumes, and in one of them, Hoover was kind of relating a letter he had gotten from Chancellor Brüning, who was known as the Hunger Chancellor of the Weimar Republic, because they had been massively over indebted, and they had a lot of dollar debts because they had bought a lot from the U.S. And Brüning was essentially writing to Hoover, I think this was after the Smoot-Hawley tariffs in 1930, right, that made it difficult for everybody to send their products over here. And Brüning was like, hey, I borrowed all these dollars, and if I can't sell you things for dollars, I can't pay your money back. Okay? That's the way this works, right? And so when I look at the strong dollar, Howard, I think people need to remember that 60% of all the debt in the world is in fact in dollars. And so the dollar has a propensity to go up a lot in times of financial distress because, you only get to keep your dollar debt current by, delivering in your interest payments into your dollar short.
Right.
And if you can't deliver the interest payments to keep your dollar short current, you get a margin call, and then you have to sell everything or the bank sells you out. And so that's one of the reasons that I'm looking with some circumspection about the Fed's very strong-willed attempt to go out there and destroy any and all price increases. These are very necessary price increases to create new supply. I know it's been overdone. I know it hurts in the short run, but if they create a recession or some kind of short-term slowdown, that doesn't get us more natural gas. I mean, the people that are out there in the business of finding commodities and so forth, they need confidence, they need money, they need to poke holes in the ground, they need to find these resources, they need to get them where they need to go. And if they are not making those investment decisions, either because the ESG crowd, is hateful for them, or because they just don't have the confidence, because it looks like the authorities are going to go after these price increases with a fungo bet. I just think that that's going to create a higher cycle for longer, and it's going to be more volatile. The fundamentals will win out in the end, but this is it's not a straight path from A to B, in my opinion.
Dude, I could talk all day, but I'm going to let you go back to work. Two things that you said is, I'm starting to think the same. The strength in the dollar is more a sign of distress than anything, and that this slowdown from rising rates does not find us more natural gas. You know what I mean? Like, sanctions on a murderer don't solve the problem that we have. You might think you're sticking your hand in his face and flicking the ears of the Russians, but it doesn't solve the crisis at home. So wonderful non-political way of sharing that with us. You're fantastic. I don't know, Knut, do we need anything else from this man? Can we leave him alone? Yes. You know what? We never do that, so thanks for doing that, Knut. So, Lewis, it's great to talk to you. I'll see you on the internet. And sorry I can't make fishing this week, but I'm moving my son to Montana. And no date. You see what I did there, Knut? And
fantastic.
Yeah, fantastic. Thanks, Lewis. You're the man, and I hope everybody's well.
Yeah, thanks, Howard. It's always fun.
K-Nut.
He is such an eloquent, polite, and knowledgeable man.
Yeah. I mean, but the way he delivers the message is from years of experience. It's not like you're wrong and I'm right. It's more like, this is how I see the world in big pictures. And when you look in big pictures, guess how many times you're a year or two early? And I know that. I can't afford to be a year or two early. But at the same time, when you try and be precise, you lose 20, 30% very quickly, which has happened to me. And so there's no one way to do it. And Lewis is just a different way to think. And that's why, people should be very careful about who they pick as their advisors. And you can't just have one advisor sometimes. You have to talk to a myriad of people. That's why the mafia have consiglieres, people that pull this all together for them. Right. When I tell people, what they should do about if they're wealthy, I say, get a consigliere, someone that you can talk with. They don't have to make all the decisions for you, but someone who can listen to all the parties and give you information. Putin's a murderer because everybody's scared to tell him what's going on.
Right.
And we don't know really what's going on. So everybody's an expert on what Putin, no. What Lewis said, he's a murderer. Europe's relying on him for their fucking energy, and the murderer did what the murderer did. Let's deal with what Europe's got to deal with. And U.S. too, with natural gas. Like, raising rates won't bring us more natural gas.
No.
So those are the type of things that get me excited, is when I can just, with a foam bat, hit us over the head and explain to us what's going on. So anyways, I feel good about at least sharing that. Did you learn something?
I always learn something.
Great. So that's Lewis Johnson, my friend in Florida. You are listening to Panic with Friends. Knut and I sit down with traders, investors, money managers, consiglieres, venture capitalists, people that try and just keep us not from going broke, or keep us from going broke. Or maybe put us on a path to some joyous wealth. Anyways, search my name, Howard Lindzen, on YouTube, Google, the internet, Howard Lindzen, and you can go to Spotify or Apple Podcasts and subscribe, and you will get one every week, an alert, and you won't have to worry about things. Thanks, everybody. Talk to you soon.
Howard Lindzen is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions in securities discussed.